Díomh agus fáilte arás to the Crazy House Prices podcast, the podcast where I help you buy your own home, understand the madness of the Irish housing market, and generally just adult a little bit better. I'm your host, Ciarán Mulqueen, and today in episode 41, I'm joined by Sinéad O'Carroll, who is an expert mortgage broker and qualified financial advisor at Finance Solutions, to talk through the mortgage process and answer some of your questions that you sent in. We start by going right back to what you should be doing 6 months before you apply, why you should use a broker, and then to finish we get into the biggest questions that you guys sent in. So this includes borrowing above the purchase price for renovations, getting exemptions, switching your mortgage if your home's value has gone up, how second time buyers can manage selling and buying at the same time, remote working rules, and how banks assess mixed income for self-employed people and PAYE earners. We also talk about credit reports, so make sure you listen to the whole episode. Also, please make sure you're subscribed to the podcast wherever you get your podcast. Please leave a rating, a review, a comment, etc. It just all really helps get the podcast out there to more people. I must also mention too that I am in a partnership with Finance Solutions. They are my trusted mortgage broker that I work with on my Instagram, and genuinely they're just an absolutely brilliant company. They're so dedicated, and for me it's just a massive relief to be able to just refer people that follow my page to them, knowing that they're going to be really well looked after by absolute experts. In fact, they just won Best Mortgage Broker at the 2025 Brokers Ireland Awards last week. So they've over 75 mortgage experts on their team. So do rest assured that they are quite literally the best at what they do. So, okay, let's get into it. Now, Sinead, thank you so much for coming on to the Crazy House Prices podcast. We are chatting all things mortgages today. So could you give us your brief on what people need to do, say, 6 months before applying for a mortgage?
So on every call that I have with my own client, I try to break down the process as clear as possible, okay? And I try to break this down in 5 simple steps, okay? So income, you have to have an income, and this is your borrowing power. So typically my questions would be, are you PAYE employed? So whether that be permanent employment, maybe it's contract, fixed term contract, maybe it's even agency. There's specific documentation around this. So guiding the client through what's required there, okay? Self-employed, is it sole trader, partnership, limited company, many different scenarios for a client here. So guiding them through exactly what's required to be presented, okay? The repayment ability piece is key, okay? So typically lenders will be looking at 6 months demonstration, okay? So what they're looking for here is they're looking to see that you've demonstrated ideally the proposed mortgage repayment for a minimum of 6 months from your net salary. And as a first-time buyer, this is going to be the most obvious would be the rent and the savings piece, okay? But it can be demonstrated in other ways, and this is where the broker comes in, okay? But I suppose for a first-time buyer, a lot of things that I would see around rent, for example, okay? So rent can absolutely be taken into account for repayment ability. A lot of things I would see from a day-to-day perspective will be people living at home, paying rent or contributing toward the household to parents. This absolutely can be taken into account, but consistency is key. So is it the same amount every single month, going through your accounts ideally? Rent paid in cash is another one, okay? So absolutely it can be taken into account, but a couple of key things to factor here would be, are you withdrawing the same exact amount from your account each month? Because that would be super helpful. Do you have corresponding supporting documentation, which will be your rent receipts from the landlord or even furthermore a tenancy agreement, okay? So definitely repayment ability
And
super important.
just on that, so somebody is paying rent in cash, because I know a lot of people are, unfortunately, which is a problem. But let's say I'm paying rent in cash. Can I just even keep a journal or a document on the date that I paid it to try and make it kind of correspond with when I've taken the cash out? Would that help as well? Let's say the landlord wants nothing to do with, admitting that they're taking their rent in cash. Would that work as well?
Unfortunately, I suppose specifically the lender would look for the rental receipt. Now, when I'm talking about a rental receipt, it's very basic in terms of, a receipt book from Eason's, for example, just confirmation of the month, the date, a quick signature, or, sign off from the landlord. It's not necessarily anything official, that would implicate anybody in this situation. But again, the lender's just looking for corresponding confirmation of what that withdrawal is, because they don't have a specific track record or official transfer,
Okay, perfect. So we've got employment. So whether
your
that's
income,
So employed, whether that's self-employed or in a permanent role or whatever, that'll all depend, and that's where they need to talk to you. Repayment capacity or repayment ability, which can include rent, as we said, and that's also then your savings as well. So for people to show that, they kind of will need to have an idea as to what their mortgage repayments will be, so that they can show they're matching that as well. Is that the case?
Exactly. So that's where the conversation around income would happen. So as part of the research stage, or even if it's just an initial call with any of our advisors, what we would do is break down your borrowing power based on that income. Okay, so we can have a quick review of it, or a quick call on it, or essentially you can provide the documentation and we can give you a more in-depth review of your borrowing power, and from that we can actually highlight what that proposed repayment will be, what ideally you need to demonstrate over that 6-month period. And that's why going back to applying 6 months before or 12 months before, whatever your timeline is, that will be key for us to guide you in reaching your target goal in this process.
Okay, great. Is there anything else then that people need to have done in that 6 months before applying?
Absolutely. So the next key thing I would always highlight is statements. The lender's going to look for 6 months of all active accounts. Okay, so outside of the repayment ability, why do they want 6 months of the statements? So what they're looking for here is that the accounts are not under financial stress. And what I mean by that is you're meeting your current commitments, okay? Whether it be standing orders, direct debits, if you do have revolving credit facilities such as overdrafts or the dreaded credit cards, that you're not overly reliant on this type of credit, okay? You're not using it for living expenses, lifestyle expenses. That's essentially what the underwriters are looking to see when they're looking through the statements, okay? So again, the 6 months piece is great to have a chat with us before, just in case you need to prepare anything within that regard, okay? Deposit, okay? Deposit is really important. So as a first or second time buyer, you are required to have a minimum of a 10% deposit, okay? So typically this would be for first time buyer, life savings would be the obvious one, and help to buy if you're going down the new build route or maybe completing a self-build project, or lucky enough to get a family gift, okay? Ideally from a blood relative. So again, getting the information of, what do I need to prepare for this? How do I need to show for this? How do I address this at that initial stage for approval in principle? So I would have that conversation and touch on all those points initially. The last point that I would have, and I suppose what's most important, is a clean credit history ideally, okay? So when we officially go to submit the application, the lender will run what's called a Central Credit Register report, or CCR report, okay? So again, the client themselves, if you are anyway anxious, worried about this, you can actually run this directly yourselves. It's a free request. You just go to the website, centralcreditregister.ie, and you can run that. And if it's not making any sense to you, I would have a lot of clients that would run the report and we'd actually go through it in the initial meeting. That's how we would work it. So don't be worried on that. And if there is something showing up, we're preparing you, we're guiding you through a timeline, or putting a plan in place, if there is something showing up there.
Okay, Deli. I remember I had my own issues with my credit report, and it wasn't actually anything that I did wrong. I wrote about this in my book, and I've spoken about it a load of times, because I'm always reminding people to check their credit report, because it was actually because the credit union that I took a loan out to do my master's, they closed down and they went to a different credit union, so all the accounts were sent over to another one. They lost all their documents, and it was an absolute mess. There was a credit card issue from college that again wasn't my fault, and so even though I actually didn't do anything wrong, there was still things being flagged. So it's important to really get that sorted before, just to save your own stress and your own time then going forward. So just a quick recap. So in that 6 months, we're looking at income, we're looking at employment status, we're looking at if you're doing rent, we're looking at your credit report, and what else? What am I missing there? What was
so your income, the repayment ability piece, and the 6 month statement piece then obviously.
Statements,
and then obviously deposit, how we're going to address that.
Yeah, deadly. And I would also say to people, like 10%, you still need another 1% for your stamp duty, another few quid for solicitors' fees and all the other bits. So I always kind of say around, if you can, 12 to kind of 13% will generally get you over the line. Then in terms of timelines for approval in principle, because I know you guys work with multiple lenders. So what are the quickest approval in principle timelines you're seeing at the moment, and what are the kind of longest ones?
Yeah, so a good question. And essentially it completely varies lender to lender, okay, because we work with so many lenders. Essentially the quickest I'm seeing at the moment is 24 hours, to actually a little bit quicker than that, to be honest. But 24 hours is the quickest. The longest probably around 15 business days. Okay, if we're looking and we've no clarification, but again, just depends on the lender, and that's the I suppose the great thing about the broker can advise of that. So identifying your needs, is speed essential? Is that really important to you? Because then I can solve that for you, but here's the situation around that, you know.
Absolutely. And that kind of leads me on to my next question, because there are different lenders in the market now. And as you said, I'd imagine, I don't know which one it is, but I imagine it's one of the newer lenders that is doing that 24-hour turnaround. So why is it? I'm always telling people to go to a broker, especially Finance Solutions, because I just know how good you guys are. But what would be your, say you're sitting at you're at a dinner table at a wedding and people want to know your 3-minute spiel as to why people should use a broker like Finance Solutions. What would you say to them?
Yeah, absolutely. Look, first and foremost, we do not charge a fee. Okay, so essentially, our service, we do not charge a fee from our service, right up from the initial phone call right up until you secure your keys. Okay, at Finance Solutions, we look after everything from your paperwork right up to all the insurances required, you know, mortgage protection, house insurance. We look after everything under the same roof. We work with all major lenders. Okay, so by coming to us in one meeting, you're breaking down all of your options for you. Okay, and most importantly, we're identifying your mortgage needs. Okay, so again, just to touch on, is speed important to you, or do you just want to know the difference between fixed and variable rates, cashback offerings? Actually, I want to overpay my mortgage. How do I do this? How do I clear it quicker? So as a broker, we're identifying those needs and identifying the lender that best fits that. Okay, but most importantly, you know, we work for you, the client. We are not working for the bank. Okay, and at Finance Solutions, we have a wealth of experience across the team now. So in my opinion, broker is definitely best. And obviously Finance Solutions are best.
I always say to people, there's two things I always mention when it comes to brokers. One is, like, the people will hear that and they say, like, it kind of sounds too good to be true, and we're so used to being cynical about anything to do with buying a house in Ireland. But it's important that people understand that you get paid by the lender, and you get paid the same amount no matter which lender you choose. So there's no incentive there for you to choose a certain lender over another, because you get paid the same regardless.
Absolutely.
And people then don't really understand, like, it sounds what the strings are there, but there are no strings attached. And I always say, like, if I went on, say, Dragon's Den, and I came up with the idea and I pitched an idea to the Dragons that I want to set up a company where I'm going to put probably on average around about a year's worth of work in, and I don't get paid until I've done my job a year in, the Dragons will be like, that's a crazy idea, absolutely not. But you know, it's on volume, and you guys have so many brokers there, so much expertise, so many years of experience, you know what you're doing. And I always say it's a bit like matchmaking, but like it's finding instead of finding the perfect partner for you, to find the perfect lender that matches exactly what you need in terms of buying your home. Whether that's, if you're not overly worried about an interest rate, but you just need to get something done really quickly, or maybe you're looking to switch your mortgage, you want to release equity, or whatever it is. It's just like, this is what you guys do all day, every day, and you work with all the major lenders. So to me, it's a no-brainer. And yeah, like, so that's what I would kind of always say to people, is just do yourself a favor. You're saving yourself a lot of time. I've done both. I've gone direct, and I've gone to I've used a broker. So I know, I've kind of seen both sides of it. So it's it's absolutely the way to go.
Because a lot of people would look, I suppose, you know, maybe they bank directly with a bank and they think, oh, it's just easy because they have all my statements and they don't require. Not necessarily. Like, at the end of the day, the broker's looking after all the documentation anyway. You're going to still have to provide a similar level of income documentation, and they're going to provide and tick off checklist in terms of what they offer you and make sure they're meeting criteria for that. They're not going to highlight that there's, you know, an interest rate much better next door, you know. That's essentially what we're doing, you know.
And it can be the difference of hundreds of thousands over the
term.
The length. Yeah. So right. Anyway, I've got some questions sent in from people on Instagram. Okay, and we're gonna look at maybe 7 of the questions that kind of cover the most commonly questions that were sent in. So for the first one, this is a really topical one. So let's say you find a home. Can you get funds then above, say, the purchase price to pay for renovations? So let's say you find a fixer upper, it's 300,000, but you know it's going to need another maybe 200,000 put into it to get it up to kind of modern standards. Is that possible?
Absolutely, it is. But there is a little bit more to the transaction itself. Okay, so typical questions that I would ask the client upfront, and when they're thinking about this type of project, would be, you know, have you prepared quotes for the works? Do you have any idea in terms of what it's going to cost you here? Will there be planning permission involved? Will there not? Will you be employing an engineer or an architect to supervise these works, or do you plan on doing it yourself? And do you have a contingency in place, a 10% to 15% contingency of these cost of works outside of that 10% deposit, legal fees and stamp duty? Okay, because all of the answers to these questions will actually influence the lender's decision of how they measure the transaction itself. Okay, and typically with extensive works, maybe more of the pillar lenders will suit these type of transactions, but that's where the broker will step in and kind of highlight which particular lender is going to tailor to your needs in this specific transaction. But what's really important to highlight, the proposed works that you hope to do must be adding value to the property, okay, for the bank to be able to lend. So remember, going back to the central bank rule, typically it's 90%, and in this scenario 90% in the market value on completion will be what most lenders will consider, and that's determined by a panel valuer belonging to the bank. Okay, so that's what's key in these scenarios. So there's a lot to it, I will say that, but the right broker will guide you through the paperwork for it, even refer you maybe to surveyor if required, that kind of thing. That's the way we would structure it in Finance Solutions.
Yeah, so it's definitely possible. You just,
For sure.
it's a little bit more complicated. You have to have costings, and it all needs to fall under your like max mortgage approval amount anyway.
Exactly.
And on that, so second question then. So I'm guessing most people understand now that if you're a first-time buyer, you can borrow up to a maximum of 4 times your income, and if you're a subsequent time buyer or a second-time buyer, it's 3.5 times your gross
Correct.
income,
Yeah.
household income. So is there a way of getting approved for more than that, say 3.5 or 4 times, depending on which type of buyer you are?
There absolutely is. So what this individual is referring to would be called a loan to income exception, or exemption is kind of the terminology that you will hear. Okay, so essentially this is where a lender will consider over and above, beyond the central bank rule, whether you're a subsequent buyer or first time buyer. Okay, and I'd always break it down in 3 elements for my own clients. Okay, number 1, do you meet the criteria for the exception? Okay, as part of the research stage in Finance Solutions, I'm assessing you for that, knowing that this is what you want essentially. Okay, number 2, do you have a property identified? Okay, i.e. are you sale agreed, offer accepted? And the reason I suppose lenders are quite strict on having a property identified is they are measured quite strictly by the central bank in terms of their lending out exceptions on their side. Okay, and the third point will be, is the lender open for exceptions? Okay, so there is maybe points during the year, or maybe the lender was never open for exceptions. You have to remember we've a lot of new lenders as well, that wouldn't have exceptions available as of yet. So that's where the beauty of the broker will step in and highlight, okay, well, this is the greatest product offering, however this lender can offer an exception up to this limit. Okay, so that's where we're breaking down those options. So 100% is possible.
Deadly. And just on a more selfish point, because I'm public sector worker, I'm a teacher, if people are on a public sector pay scale, there are some lenders, I think, that will put you a couple of points further along the scale. Is that correct?
That is absolutely correct. And that goes back to the 4 times piece. So if you walk directly into your bank, again, they're going to tell you what their offering is. Okay, however, if you're looking to maximize your borrowing power very quickly as a broker, we can highlight, okay, well, typically this lender will go 2 increments above. I even have one particular lender 3 increments above. Okay, so again, we'll pretty quickly highlight what you need to provide to secure that. So even something as small as that may seem small, but it will be a big difference in terms of the loan approval amount that you may need without going through the exception piece, which can be stressful, trying to get a property, trying to get it secured.
Yeah, people might be listening. Well, like, is it a good idea to be borrowing to your max? But I think on the pay scale thing, the public sector is like, I'm guaranteed to be on more money in 5 years' time, in 10 years' time, I'm going to be on a higher pay scale, so I will be able to afford it. So then, next question. I got a couple of questions in here about credit report issues. So what happens if you do? So going back to that central credit register, let's say you missed a payment, or a loan, you didn't pay back a loan properly, or whatever. There was some sort of credit report issues. And let's say you've rectified it. How long do those things then stay on your record?
Yeah, so like each and every lender will have their own set credit policy around this. Typically, you're looking at 24 months. And what I mean by that is 24 months from the date the debt has been completely redeemed or the date the arrears have been cleared. Okay. But what I will say on this piece is do not compare yourself to anybody else's scenario or case, or experience, with an advisor or whatever the situation may be, because there are situations where a blip may have happened even within the 24 months or 12 months or whatever the situation was, where a lender will accept the right rationale. Okay. And that's where the good broker will step in to advise. Like, to give you a real life example, okay, only this year I had a particular client where they thought the account was completely closed, but they just missed the stamp duty. So the stamp duty continued to accrue, and it was very obvious from the CCR that we could see that happened. It was cleared and closed immediately once it was confirmed, but everything else was super strong on the application, and that was completely outside of the norm. Do you know what I mean? For that particular client, the right rationale, the right broker was able to present that case to the lender to give them peace of mind, to give them comfort, and to proceed with the deal. So please don't compare yourself, but it goes back to run the report. It's a free request, www.centralcreditregister.ie, and contact us, sit down with us, email us the report. We'll go through it if you're not comfortable reviewing it and assessing it yourself, just to make sure everything is okay.
So in that example, they might have been worried that just because they missed this stamp duty thing, oh no, that's going to delay me by 2 years. But that's not always the case,
It's not going to be the case. Yeah.
Okay, brilliant. All right. Next question then is, I'm only in this situation myself, so I'm glad this one got sent in. But let's say your loan to value, say, improves, or let's say you've bought a home and the value of the home has gone up. So is switching worth it then when say the value of your home has gone up? So when I took out my mortgage, it was 90%, but now I'm kind of at, like, because I did loads of work, so I'm probably at like 50-60% loan to value. So is it worth switching when you get to that? Like, is there things you can do, or what are people's options?
Yeah, absolutely it is. Essentially what would happen at the end of your fixed rate, for example, you would be prompted by your existing provider. They would write out to you, they would highlight what their existing business rates are. Okay, but at that point, the minute you get that letter, you should be contacting your broker to just have a quick call, get a little bit of information in terms of what the market rates are. Okay, so the questions I would ask is, what's the loan amount left on your mortgage? Do you have an idea of the market value of the property today? And essentially the BER of the property now comes in for a lot of lenders. Okay, so that can be key information. Okay, at Finance Solutions, what would happen is, once you draw down, you're a client for life, you're stuck with us. So we would contact you 3 to 6 months out. Typically, actually 6 months would be the rule. 6 months out of the fixed rate expiring, just to touch base. Have you received any letter? Give you an update of what the market looks like. Compare what your existing provider is offering you versus new providers on the market. And I will say 90% of the time, the new business rate elsewhere would be more competitive. So it's definitely worth the phone call for sure.
Yeah, and I know some give like cash back and all that kind of stuff to help cover, because you do need to pay a solicitor when you're doing that. Not to be all teacher's pet or anything, but my fixed rate is up next August, and I was already emailing finance
You're all over
last week. Yeah, but so it's just important to kind of, especially because, as you said, the BER rating and all that kind of stuff. So if you've done works to the house or whatever, and as we know, unfortunately, property prices have gone through the roof over the last few years. So, but there is it's something there that people can do if they did buy a few years ago, and they might be able to get a better rate or whatever. So
yeah, even on that, like, I suppose just to add, the final point would be, maybe your needs have changed. Okay, so say for example, your initial 3-5 years, or maybe you're coming to the end of the term and there's 15 years left. Maybe you want to take all the risk out of it and don't want to hear anything more about rates, anything more about mortgages. There is lenders there that will offer a one mortgage product, which is the life of the mortgage. There may be an overpayment facility on that, but you're taking, you're giving yourself peace of mind. So your needs based on that point of time in your life, that can all be taken into account in these decisions as well.
That's exactly what I was talking with you guys about, because I was like, oh, well, I just do this 25-year fixed, because I think it was only like 3 point something percent. It's not bad. And then, I know what I'm paying then for the next 25 years, and then just not worry about it. But anyway, I'll deal with all that over the next few months. But next one, then, this is something that I kind of, speaking of that kind of second time buyer thing, it's something I get in a lot. So because I think people's journey have kind of come along on my page with me, that they kind of bought, and now they may be looking to get something a bit bigger, or something a bit more suitable. Maybe they have a grown family or whatever. So what's the process then for, say, second, or I call them subsequent time buyer, because it might be your third or fourth time buying a home. But what's the process process then for those who are looking at selling and buying at the same time?
Yeah, so look, in terms of the mortgage process, we'll break that down for you, the exact same way as I said at the start of the call, in terms of what you need, your income, what you need to demonstrate, etc. But I suppose the process of buying and selling at the same time, what's really important here is appointing the right solicitor, okay? Because communication is key, because the solicitor here is going to align the dates, okay? i.e. they will align the selling of your home with the purchase of the new home. So people maybe not be aware, but the equity in your home can be used as a deposit towards the purchase of your new property, okay? So you don't have to worry about the transaction, because the lender will be looking after everything in terms of if there was an existing mortgage on the property, redeeming that, and obviously drawing down the new mortgage, okay? So the solicitor is really, really key in this scenario. And we partner with brilliant solicitor, Jacob Blog, an online conveyancing firm. So again, that's what's going to be key here for you for subsequent buyers, because it can be stressful,
Yeah, and I guess it's not the mortgage isn't the problem here. It's actually finding the home and trying to align everything so that you can get
Exactly.
it done over the same, close your one and close the other one, close your sale and close your purchase kind of on the same day or the next day or whatever. And I just know people are really struggling with that at the moment, because it's easy enough to go sale agreed on your place, but
Yeah, to find another one.
it's finding the other one, and then again, a lot of estate agents won't deal with you unless you're sale agreed or sign contracts even on your own place before they'll entertain an offer on the next one. So it's not easy, but it's not impossible. And I do hear from people all the time who have managed to do it.
Yeah,
So
it's very
yeah,
simple.
my sister did it a while back. One of my mates just did it there a couple of months ago. So and close on the same day. So it can be done. You just, as you said, you need a good solicitor and a bit of luck. But the mortgage side of things is handy enough. So it's like, say if I want to sell mine and buy something else, is it a case where the mortgage gets paid off from what I sell it for, that gets cleared, and then I get a new mortgage? Is that how it works?
That's absolutely correct. So it's completely new business. So we're basing it on, your situation, your income now, and your the new business rate. So essentially, the solicitor with your sale proceeds would be redeeming that mortgage in full, and then drawing down the new mortgage, combining the equity or the sale proceeds from the sale of your primary dwelling to purchase your new property. But you don't have to stress about it, because all of these are legal conditions that would go into the loan offer of your new contract, which the solicitor, again, would align and look after essentially.
Okay, Deli. I have two more questions for you,
Okay,
Sinead, and
great.
then I'll let you go. Right, next one. So, can you buy a home that's really far from your workplace if you work remotely?
The answer is yes. Okay. And this comes up quite a bit. So I suppose, post-COVID times, hybrid roles, working full-time remotely. But what I would say is the lender is going to look for supporting evidence of that. Okay. So while a salary search might have a tick the box, do you have the eligibility to work remotely? They're going to look for a little bit more. They're going to look for supporting documentation, quick letter from the employer, from HR, just confirming for the foreseeable future that it is a full-time remote role and that you can work from home. Okay. But to kind of give people, I suppose, a little bit of knowledge and hope around this area, a typical commute, you're probably looking at an hour and 30 minutes either way. And that's what they would deem as sustainable. Okay. But there is situations and scenarios where you might be over this. Okay. So a good broker will, present the case correctly to the lender. Well, what are the mitigants around this? Maybe it's hybrid. Maybe you're only actually doing 2 days within this commute. And, maybe we're going to include a travel cost to show it's not actually impacting the borrowing power. Do you know what I mean? So
Yeah.
a good broker will present the case correctly here, but we're seeing this quite a bit now.
What if you get a faster car and you can cut 2 hours down to 90 minutes? Will that work for them?
Well,
That's a joke.
absolutely, but
That's a joke. Your repayment capacity will be impacted by the fines you get every
yeah, I'm
month.
just going to say, but will you be there? Will the car still be there?
Yeah. Okay. Very good. And last one then, how do banks assess mixed income, say for buyers who are maybe part self-employed? And the people are probably listening to this going, this fella's just asking all his own questions, because I'm part self-employed, part PAYE. But how do banks assess that mixed income? And I swear I didn't put that question in. That was
Yeah,
actually
believe
sent in
it.
by a few people.
Okay, so essentially to kind of break this down, I suppose typically around the self-employed piece first, okay, it's normally measured over minimum 2 years, okay? So whether you're sole trader, partnership, a limited company, it's 2 years worth of your personal tax returns and then obviously company accounts in a limited company scenario, okay? And it's all about the performance of the business, and that's what they're using. They're using an average of that. I suppose having the mixed incomes, my first question would be, okay, well, how does it work? Okay, do you fit all this in a typical 40-hour week? What's the situation? So the broker essentially would present the case correctly, understanding your business, how this works around in a typical working week. But the historic evidence piece of the income will be important here. Okay, if you're wanting the lender to consider 100% of both incomes here in this situation, you're presenting the case correctly in the sense, well, this is how I do it. Do you understand? And this is 2 to 3 years evidence. So the self-employed piece will speak for itself. It's minimum 2 years. The PAYE piece, how you would present evidence, would be the employment detail summary. So you can capture that off your My Revenue account. It is your statement of earnings essentially for your calendar year, January to December. So again, typically questions that I would ask my client, well, do you have 2 to 3 years evidence for both incomes? And that would be a really strong case. And again, case by case, scenario by scenario, there are situations where they could consider the PAYE income maybe less than 2 to 3 years. But again, the beauty of the broker is stepping in to argue that case for you, or present, I should say, the case correctly,
Yeah. So if, let's say, I have like I guess people call it a side hustle or whatever. I don't like that word because also makes it sound like it's not legitimate. And I know people like that work for themselves, like a 40-hour week is hilarious. It's usually 80-hour weeks. But let's say your company or your limited company or your sole trader income takes in 30,000 one year and 40,000 the next year. Do they take the average then? So is it taken then on 35,000, or how does that work?
That's exactly how it is. But what it's important to remember there is, if the most recent year is lower, prudently they will go with the lower year, unfortunately. Okay,
yeah.
Typically it will be the average. So sole trader, it would be what you're returning on your tax return. However, for the limited company, again, I would have specific lenders that would work off the accounts. A lot of self-employed, for tax efficiency, maybe wouldn't pay themselves a lot. So I would have lenders that would look back, your remuneration, your net profit, depreciation. There's all these kind of situations and scenarios where lenders can consider more, but that will be down to the lender's credit policy. So the beauty of the broker is knowing that information and guiding you through meeting your needs based on that. Okay, whereas you go directly to your bank, who you hold all your business accounts with, they're going to offer you based on what they factor, and that may not be the best option for you.
Yeah. Okay, brilliant. I'm getting a bit selfish here in my own questions, but listen, Sinead, thank you so much for that. That's really helpful. I really appreciate it.
Yeah, thanks a million for having me. Really appreciate it.
Agus Sinead Lahai on episode shut of the Crazy House Prices podcast. Thanks again to Sinead from Finance Solutions for taking the time to go through everything. If you're looking to switch mortgage or you're planning to buy in the next year, talk to Finance Solutions early, run your free credit report, get your accounts in good shape. It will save you time and stress when you apply. Their website is www.financesolutions.ie. And if you found this useful, do share this episode with someone who's starting a mortgage journey. And if you want to support what I do and get access to bonus Q&As, you can join my Patreon. It's only €3 a month and it helps keep the podcast going, the Instagram page going, gives you exclusive access to my housing community. And of course, my book, How to Buy a Home in Ireland, is available nationwide, or even better, just borrow it from your local library for free. Anyway, thank you for listening. Slán go fóill.